How's it going, everybody? It's Stas here. So the stock market's having a pretty volatile day today. It's a choppy day, very similar to yesterday. S&P 500's up $9 right now, up about 0.3%. The Dow Jones is down about $12, down 0.05%. And the Nasdaq's up. Nasdaq's crushing it. Tech stocks are doing very well today, up $150 on the Nasdaq, up 1.4%, as the Russell 2000 is taking a hit, down 1.5%, down $22 on the day. And in this video, we're going to be talking more about the stock market like we do every single day here on the channel, breaking down some technicals, going over where we could be headed here in the short term. And I also want to break down the main stocks that I'm looking to buy right now. I also want to break down some earnings reports from a couple of companies here, and in general, what I've been doing as of late in the stock market. A lot to go over in this video. If you guys find value in it, as always, hit that like button for me, consider subscribing to the channel, and check out all the free links down below in the description box if you want to join our Discord chat, our Facebook group, and if you want 2 free stocks from Webull valued up to $1,400. All you have to do is use that link down below, put in $100 into the account, and you get your 2 free stocks, again, valued up to $1,400. So let's get into it, guys, with about 35 minutes, actually 25 minutes left in the market. This is what we're looking like, right? Very choppy day, very volatile day, very similar to yesterday. Going back over here to the S&P 500, we've pretty much been range bound this entire week. And by that, I mean the S&P has been trading within 3,200 and about 3,250, right? You guys can see, I'm not sure, was this on Monday? Yeah, Monday is when we saw that big drop in the markets. No, it wasn't on Monday. It was actually Friday we saw that drop. We hit 3,200, rallied a bit into the close, and then on Monday, we ended up, that was Friday we saw that. Then on Monday, we ended up gapping out of 3,220, taking 3,230 out and getting rejected at 3,250. We got rejected on the 29th of July at 3,250, which makes 3,250 a big resistance. And today, as of right now, we're still struggling at 3,250, but we're holding 3,220 as a support, hence why we're in a range, right? This whole week, we've been trading between pretty much 3,200 and 3,250, right? And earlier today, guys, if you were watching the market, S&P 500 actually gapped up to 3,270, and 3,270 is very, very close to that resistance that I've been watching here from yesterday, back on the 29th, 2 days ago, right around 3,265. So we took that level out, but we failed to break out of the previous bigger level, I'd say, at 3,280, which is where we struggled back on the 20th, the 21st, and the 23rd, pretty much for a couple days here last week, right? So at this point, the markets are still not completely bullish. I mean, we're not breaking out to the sky. S&P has not hit all-time highs quite yet like the Nasdaq has, but we're obviously not bearish either. We're kind of stuck in this range waiting for direction to be picked. And don't get me wrong, guys. I mean, I'm talking short term here. In the short term is where we're kind of not bullish or bearish, but longer term, on the 4-hour chart, I mean, it's obvious that the bulls are still in charge. But in the past couple of days is where we've been range bound. We haven't really picked a direction quite yet, but I think that is going to change next week. We only have about 25 minutes left in the session today, so we'll see if we do end up hitting maybe 3,260, 3,270 in the next 20 minutes. We'll see what ends up happening, but ultimately I'm liking in general how 3,220 held today. That's a very good sign for the bulls, and For next week, I'm watching it closely. 32.20, if we go back down and retest it, do we take that out? Do we hold it? What do we do there? 32.50, do we break out today and rally out of it, on Monday, Tuesday next week? And then ultimately, do we take out 32.80 here on the S&P? If that happens, like I've said on these videos, that is where I think we're going to go to all-time highs on the S&P 500. Dow Jones now down $3, pretty much turning positive at this point. It'll probably be positive by the time we're done filming this video by the looks of it. I mean, we hit double bottom at about 26K. That's where we bottomed out yesterday. We bottomed out there today, so that's looking good, right? This is a bullish move. If you guys don't know, whenever we see a double bottom breakout, that's pretty bullish, and that's exactly what we're seeing now. Despite the downtrend on the Dow not being broken quite yet, we're not fully breaking out, but we're getting there, and we'll see next week what ends up happening. If we take out 26,400 on the upside, we break this downtrend on the 5-day, 5-minute, that is where I can see the Dow Jones going much higher. So watch 26,400 on the Dow Jones. I've been preaching about this over the past couple of days on this channel. Really, it's been about a couple weeks since we've been talking about these main levels. So subscribe to the channel again if you haven't done so already, if you want daily market news and market breakdowns like this. So if 2,400 breaks, 27,000 is in striking distance here on the Dow Jones. And ultimately, guys, today's hold at about 26,000, today's and yesterday's double bottom formation, that's actually a hold on top of the 180 SMA as well. So this could really be the bottom here on the Dow, but time will tell, of course, like everything here in the markets. Time always tells what happens. That's pretty much everything in life, right? So going over here to the Nasdaq, $150 up here, you can see we clearly took out 10,700, which I've been talking about that as a pretty big resistance stemming back from the end of, actually more like the beginning of July, the 7th of July to be exact. I mean, ever since that, we took out 10,700, hit an all-time high at about 11,000, and ever since then, I mean, we've been range-bound from about 10,400 and 11,000. So we clearly held 10,400. We clearly broke 10,700. So the bulls, it seems like, in the long term on the Nasdaq are in charge. And in the short term here, they're trying to get in charge. We're getting there, especially if 11,000 takes out. That's going to be a huge bullish move. But with how tech's looking, I would not be surprised if the Nasdaq did end up breaking $11,000 next week. We'll see what ends up happening. And again, that is where the bulls will take full-fledged control of the Nasdaq. So that's kind of a quick little brief update here with about 20 minutes left in the market of what's going on. It was a bad, rough day. It was a pretty rough day earlier. Again, the markets actually did well in the morning. We gapped up, but then it was rough. Big drop in the markets, S&P especially. We got a big sell-off there. We got a big sell-off in the Dow. And the Nasdaq, we saw some profit taking as well in some of these big tech stocks that reported yesterday, like Amazon. We saw a big profit take, which we'll see in a little bit here what happened. So the fact that the bulls ended up coming in and buying this dip is a very good sign for next week if you are a bull. And notice how the Nasdaq ended up selling off, and where did it consolidate, guys? Where did it consolidate? Right at 10,700. We've literally been calling this out, and this is a very good sign here that we held yesterday's highs today as a support. Very good sign for the bulls at least. So let me know down below in the comments, what are your thoughts as always when it comes down to the market, the S&P, the Dow, the Nasdaq. Now let's talk about some economic data that came out today. Very interesting stuff here when it comes to disposable income, personal income, as well as personal consumption in the month of June. So I forget exactly. I think I got this from, was it Chamber of Commerce? Either way, I got these from a credible source. Let's just put it that way. And we have personal income here. It decreased $222.8 billion, 1.1% in June, according to estimates released today by the Bureau of Economic Analysis. That's where I got it. I think it was BEA.gov, I think it is. Go check that out for yourselves. So we got a 1.1% drop in personal income there. Disposable personal income decreased by $255.3 billion, which is a drop of 1.4%. So we're seeing a drop in personal income, in disposable personal income. And then, get this, guys, personal consumption expenditures increased by $737.7 billion, which is 5.6%. So consumption there increased while income and disposable personal income dropped. So that's pretty interesting. That's a pretty interesting stat there when it comes to, income, disposable income, and expenditures when it comes to the American people. So, and especially during this time period of crisis, all the stimulus checks and so forth. So are people getting these stimulus checks and spending them? I mean, it very well seems like they're doing that with that increase in personal consumption expenditures. And when it comes to my trades today, guys, like we talk about every day on the channel, like what I do every day here in the stock market, today I added one position. I added one position today in GDX. And I actually talked about GDX yesterday, talking about how I wanted to enter into a swing position on this dip, and I did exactly that. On this hourly chart, you guys can see we pulled down from about 44.70. We held $41, 180 SMA. This was yesterday at a higher low, but I was waiting for the gap up. I was waiting to see some bullish momentum off of these moving averages on the hourly chart to get a position going, and that's exactly what happened today. GDX up 3% today. Gold is up almost to $2,000 an ounce today. It's up $23 an ounce and actually hit $2,005 an ounce here in the futures market overnight here on the East Coast at around 2 a.m. Eastern Standard, which is unbelievable. And, GDX is running. I mean, it's not completely correlated to the price of gold like GLD is. GLD is more of an ETF that tracks strictly the price of gold, but GDX is a gold miners ETF, so it's kind of more of a speculative play here on gold, and it's kind of a delayed reaction. It seems like as of late, it has been at least, and by that I mean it's going up in a delayed fashion as opposed to what gold's price is going up. And by that I mean gold saw a massive spike recently, and GDX kind of was just consolidating, and this was actually like a month ago. We can see it here. Yeah, it was consolidating from 32. It hit 38, went back to 32, and during this time period, gold was doing pretty decent, I believe. Let me just double check that. Gold was consolidating a bit, but started to break out, and now GDX is starting to follow that. So I'm thinking GDX has more upside here, of course, and I ended up getting in at $42.33 today. On this daily chart, you can see, on the intraday chart rather, you can see we pulled down today after the gap up, and we held yesterday's highs as a support. That's the first thing that I saw this morning, and I was like, boom, okay, this is good. Now let's see if GDX rallies out. I'll end up forming a position, and that's exactly what we did. And I ended up buying in again at $42.33 right around this time period, at about an hour and a half in to the market. So I did that. I'm holding GDX over the weekend. This is a longer-term swing trade for me. I might add more to it if the price comes down. I might add more to it if the price continues going up. We'll see what ends up happening. I'm also in Netflix. I'm still holding Netflix around $490 cost basis on this particular stock. Ultimately, I think we're going back to 500. We're going back to 500. I'm looking to sell out 520, 530. Ultimately, I'm having patience with this stock. And like I say on the channel all the time, guys, patience is key. You cannot always just get in a stock and then expect profits the next day. It doesn't work like that. It does not work like that. Sometimes a trade pans out and the time frame is much longer than what you thought it was going to be. Like, for example, let's say originally I wanted to get into Netflix and hold it for 5 days. I mean, it's not looking like that's going to happen, guys. I've been in it for about 5 days at this point, whatever, and it hasn't budged. And this is a perfect example of that, and a perfect example of having patience, because if my price target comes, 520, 530, and I hold on to the shares with patience, obviously, I'll be rewarded. It's kind of like that delayed gratification effect here, just waiting and having patience. So I'm in Netflix, NFLX, I'm in GDX. I'm also in Microsoft at $200.50, still holding on to that swing trade. And I am also still in Workhorse, which is getting clobbered today. Last time I checked, still getting clobbered. Down about 5% today, down about 80 cents. So I am a bit red on my Workhorse position, which I'm in at $16.40. And I was getting questions yesterday, where do you want to sell Workhorse? Quite honestly, guys, I feel comfortable, like I've been mentioning, trimming off some profits at around $18. $18. And honestly, I wouldn't mind letting some shares ride if 18 breaks, because I think $20 could be the next target, right? $20. So 18 is where I'm looking to sell, but $20 could be where I'm looking to offload even more shares. So a majority of my selling would be at $18. Then maybe I'd let some ride to $20 and take some profits there. So overall, that is what I did today. Those are some data points when it comes down to the economy and how people are doing when it comes to personal income, disposable income, and consumption, and in general, kind of my thoughts on the markets here when it comes to technical. So let me know down below in the comments, what are your thoughts? And let's get into some companies now that just reported earnings today. One of these reported yesterday. I didn't talk about it yesterday because, quite honestly, we had too many other stocks to talk about. But this one is EA. They reported yesterday, and the stock today is up 2%, up $2.63. And they ended up crushing earnings, guys. EPS came in at $1.25 versus 79 cents estimated. Revenue came in at $1.46 billion versus $1.05 billion. So they destroyed EPS and revenue, and the stock is at a pretty big resistance, to the point where I'm thinking if it takes 142 out, this is where we might be headed higher on the stock. This is where we could finally be going back to those levels that we were at back in 2017, heading into 2018, right around $151 per share. You can see that is where we spiked at for EA before seeing this 50% drop. And ever since we took out 113, 115, I've been calling this stock out for months at this point, guys, and I've been tracking it for months. I mean, ever since we took 115 out, I've been saying watch 120 on the upside, watch 130. That's a big level from back in the beginning of 2018. And once 130 breaks, I've said this, and you guys know if you've been following my channel, I've been saying if that breaks, we're going to 150. And with the good earnings report that we just got, and if 142 breaks, which could bring in a bunch of bullish momentum, I mean, we're going to 150. I'm saying it now, and I'll probably add a position next week if EA ends up taking out 142. So EA is very worth watching at this point, in my personal opinion. Caterpillar, CAT, is another one worth watching here on the dip. You guys can see we got rejected at 140. That was a big resistance. I actually called this one out on my Instagram. It didn't really pan out quite yet. Next week, it'll probably pan out. And if you guys don't follow me on Instagram, follow me there at Stas Surfes. Simply my name. I call out stocks every day on my story, and I also post just random stuff. If you guys want to see what I do throughout the day, go check out @StasSurfes on Instagram and follow me on Twitter as well. I'm tweeting throughout the day as well. So that's Caterpillar. CAT, we got rejected at 140. We pulled down now. It seems like we're holding 130. And yet again, we're range bound. Caterpillar has been range bound recently. I mean, from 130 to 140. It's made that move multiple times in the past couple months. And they reported earnings that were pretty solid. EPS came in at $1.03, 103 versus 64 cents estimated. And revenue came in at $10 billion flat versus the $9.38 billion estimated. So they beat on EPS, they beat on revenue. Why is the stock selling off 3%? I'm not too sure exactly. I mean, there's got to be some reason. Is it estimates here? Is it guidance? I'll probably take a look a little bit deeper later today after this video, but it could open up an opportunity, guys. Oh, here it is. Demand slumps. Okay, second quarter. Caterpillar reports drop in second quarter as demand slumps, but revenue, earnings still top estimate. So that's a headline there that could be telling us a little story. So are we seeing some, guidance drop? That could be something there worth talking about. But either way, Caterpillar seems like it's holding 130. And despite this earnings report that might be negative in some people's eyes, the technicals are not lying, and stocks, a lot of the time, they trade strictly based off technicals, and that could be something we're seeing here. So for next week, I mean, watch this move. I'm talking up to about $140 on Caterpillar, and AbbVie ended up reporting today dropping as well. ABBV, this is down 2%, down about $2 today. EPS came in at $2.34 versus $2.19 estimated. Revenue came in at $10.43 billion versus the $10.08 billion. So they beat on EPS, beat on revenue. Stock got crushed. Not really crushed, but it's down about 2%, not doing too well whatsoever. And for me, guys, I am not jumping in to buy this one quite yet. Maybe in my long-term account, I might add some more shares. But if we end up finding any support around $90, $92, this could end up being a bounce back play. Maybe $95 even. We could end up rallying back up to the low hundreds. That's kind of what I'm looking at here when it comes to AbbVie. Under Armour is another one that reported earnings today and arguably has the most upside here. It's risky. It's a risky stock. Not really risky like some penny stocks, but, this is a stock that and a company that's had its problems. I mean, we don't have to go into it, but you guys know Under Armour is clearly lagging behind the big players, Nike, Adidas, a lot of the big players, and the stock reflects that. I mean, even before this craziness that we're experiencing right now, the crisis, I mean, the stock has been struggling. And when you see a stock going down, I mean, that's kind of showing you that the business itself isn't doing well. Because if a business is doing well, typically the stock goes up, right? That's why you see Amazon stock up, Apple stock up, all these good company stocks up. But either way, guys, Under Armour, I mean, if I'm looking at a long-term investment, I would not buy Under Armour. But as a trade, it hit $13 earlier today. Now it's sold off about 30% from there. I'm looking at this as a potential dip. I mean, quite honestly, because they reported earnings that weren't too bad. The revenue, the top line came in at $707 million versus the $558 million. So they crushed revenue, and EPS actually beat as well. EPS came in at negative 31 cents versus negative 41 cents, and the stock's down again about 30% from that peak. So do we see some consolidation, a rally back up into $10? If we get back into 10, that could be where that bullish move gets triggered, guys. That could be where we start to get back up to maybe $11, $12 where we were pre-market here. And quite honestly, we were there back in the beginning of June. We were at about $11. I mean, we were at about $10.50 back in the end of April. So there's some hope here. There's some hope, especially now that on top of what I just said, we're also holding the main moving averages here on the 4-hour chart at a higher low. So this has to be taken seriously as a potential dip buy here on Under Armour. And ExxonMobil, I'm not really a big energy investor. You guys know that if you've been following the channel. But I figured let me mention what they did when it comes to EPS and revenue. Their EPS came in at negative 70, so they lost 70 cents versus the negative 62 cent estimate. So they missed there on EPS, and revenue missed by a big margin. It missed by about $6 billion. It came in at $32.6 billion versus $38.16 billion. So they did poorly when it comes down to EPS and, revenue. And one sign here that I'm looking at for XOM to maybe hold, and maybe we can get a bounce back play if it holds $41. That's a big level of support here. We held that back in the middle of April, back in the middle of May, back about 3 weeks ago in the middle of July. Now we're holding it again at about $41. So this could be where we see maybe a rally up, maybe back up to the high 40s. And guys, if 41 breaks on the downside, that is where we might be seeing a bigger sell-off. So be careful when it comes to XOM. These are risky plays, in my opinion, in the short term, just due to everything going on with energy and oil and so forth, and the risks still involved, in my personal opinion. And those are pretty much all of the earnings that I wanted to go over in this video. So let me know down below in the comments, what are your thoughts there? Now let's quickly break down some other stocks that are reporting next week that I'm personally watching. AbbVie, ATVI, another video game stock here. Remember, EA, we talked about it earlier, did very well. So I'm watching AbbVie to see if it does similar, right? If it does well as well. And they're reporting earnings on the 4th of August, which I believe is what? That is what? Monday or Tuesday. That might be Tuesday. Activision Blizzard is reporting there. And when it comes to the technicals here, I'm liking how we broke out of the big resistance today at about $82. That was a resistance stemming back from the 10th of July. We got rejected there once, twice, 3 times, 4 times. So the fact that we took that out, we pulled down, we're holding 82 as a support, and we're rallying back up, that is a very good sign that the bulls are taking charge and that the bulls are not looking to get under $82 again. So for me, I'm looking at Activision Blizzard as a move from $82 and maybe back up to $85. And you guys have to realize we're getting very close to those highs that we were back in the year 2018, back before the markets ended up taking a massive dump off. So if we end up taking out 85, I mean, the sky's the limit on Activision. I don't think it's going to break out to $100 in a day, but I wouldn't be surprised, coupled with a good earnings report, if Activision went from 82 to 85, maybe up to the high 80s, low 90s. That's very possible in this environment that we are currently in. And I'm pretty much bullish, and I've been bullish on these video game stocks ever since they took that big drop a year and a half, 2 years ago. So watch Activision. Watch Beyond Meat here, guys. BYND, they're also reporting earnings the same day as Activision on the 4th of August. And although Beyond Meat is still downtrending here, we're squeezing into a wedge. I'm watching it because 125 has been holding pretty well. It held today. It was up 2% on the day. 125 being a resistance back from the end of 2019 heading into the beginning of 2020. So I'm thinking if 125 holds, we get out of this wedge plus a good earnings report, we could end up getting out of 130, 135, and that is where we could start heading back up in Beyond Meat. And Beyond Meat has been battered. Ever since we hit 170, the stock's down about $40, $45 per share, and it's due for a rally, in my opinion. And we got some good news today regarding, I believe, Wawa. You can take a look here. Beyond Meat's expansion continues. Next stop, Wawa, a cult favorite, and I'm not sure if you guys know Wawa. Wawa's big here on the East Coast where I live in New Jersey. It's literally everywhere. I mean, you can't go you can't go 3 miles, 2 miles without seeing a Wawa. But I know if you guys are out in Cali, down in the South, or, in Texas or North Dakota, I mean, I don't know where you guys are watching from, you might not know what Wawa is. And out of curiosity, let me know down below in the comments, what state, if you're in the U.S., what state are you watching this video from? Please let me know. I'd love to know where you guys are watching. And if you're outside of the United States, let me know what country you're watching this video from. Drop a comment. So watch Beyond Meat there. If 125, 130 breaks, I think the sky is the limit on this stock. I think we can go higher, 140, 150, those types of numbers. Snapchat, I'm also watching on this dip still from $27 down to about $22. They did pretty well when it comes to their earnings report, and from that drop, I mean, we're down 15%, so that could be an opportunity there in Snapchat. And McDonald's, guys, McDonald's holding about 192 earlier. That was a resistance from a couple weeks ago. So good thing that we held 191, 192. Ended up rallying up to 194 now. So I'm watching this little dip here on McDonald's. Not too crazy, but we have about 5% potential if it does get back up to about $202, $203. And two more here, Visa. Visa's holding about 190. This one, although we're talking about it at the end of the video, it's probably my favorite stock, one of my favorite stocks heading into next week. So watch Visa at $190. We're range bound. We've held that multiple times, stemming back from the end of May here. So from 190, the first target I have is up to 195. Then from there up to about $200 here on Visa. And the last one is Spotify. Pretty much similar to Visa's pattern. It's range bound between 255 and about 290. So if we hold 255, hold this 180 SMA on the 4-hour chart, I'm watching for that rally out to the upside on Spotify. So overall, guys, that is it for today's video. If you guys found value in it, as always, hit that like button for me. And don't forget, let me know down below in the comments, what state are you from if you're in the United States? And what country are you from if you're watching from outside of the United States? And don't forget to join our Discord chat. It's free. And our Facebook group, that's also free, link down below. And you can also, on top of that, get 2 free stocks from Webull, valued up to $1,400. All you have to do is use my link down below and deposit $100 into the account, and that is when you get your 2 free stocks. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.